Hello, hello, hello. Welcome everybody to the Black Brain Trust. Today is Friday, September 7th, 2018. Today is our economics show. As always, we have some good topics for today. I'm one of your hosts, Lionel, here with my co-host Mike. How you doing today, Mike?
I'm good, brother. And yourself?
Good, I'm good, I'm good. Thank you for asking. As always, since this is our economics hangout, I'd like to say all points and talking points expressed on here is of our opinion. This is not financial advice. If you need financial advice, please go to cfp.net. There you can input your state, city, and zip code and find the nearest certified financial planner in your area. Again, this is not financial advice. Go to cfp.net and you can find the nearest certified financial planner in your area. So with that said, let's go ahead and get into the show. Our first topic on the docket tonight comes from CNBC.com. Title: AMD shares soar after Wall Street analysts raised their price targets for chip maker, predicting big plans against Intel. Written by Tay Kim, published September 4th. Article: Several analysts are becoming more optimistic about future market share gains for advanced micro devices. Jefferies raised his price target to $30 from $22 for AMD shares, citing the chipmaker technological advantage over Intel. The firm also reiterated its buy rating on the company. Analyst Mark Lipacis said in a note to clients on Monday that he sees the possibility that by the second half of next year, AMD will have a chip with higher transistor density than Intel for the first time in recent history. We see this as a foundational shift in competitive dynamics. Meanwhile, our checks also suggest that AMD continues to take share in high-end notebooks, he wrote. AMD shares rose 11.5% Tuesday. The chipmaker stock is significantly outperforming the market this year. Its shares are up 144.8% year to date through Friday versus the S&P's 500's 8.5% gain. AMD is the top performing stock in the S&P 500 this year. AMD is seeing beating Intel to market with a more advanced chip. Intel has said that its 10 nanometer chips will be released for holiday 2019, delayed from a plan to roll them out earlier. But AMD is expected to have its 7 nanometer next generation server chips next year. 1 nanometer equals 1 billionth of a meter. Smaller nanometer chip making technologies historically have allowed companies to create faster, more powerful, efficient chips. As a result, the Passes raised his 2019 AMD server chip market share estimate to 12% from 8%. In a similar move, Cowen boosted its price target to $30 from $25 for AMD shares Monday, reaffirming its outperform rating on the chip maker, also citing the rollout of the faster chip. Intel's delayed 10 nanometer roadmap, originally targeted for 2016 launch in client and now pushed to second half of 2019, opens opportunities for AMD across the business, analyst Matthew D. Ramsey said in the report. Last month, Rosenblatt Securities raised its price target for AMD shares to $30 from $27, also citing the chipmaker's process manufacturing advantage versus Intel. All right, now, Mike, a few days ago, you mentioned that Intel is having a problem with its processors overheating, and not only that, it did not tell anybody that the processors they were putting out were overheating. And because of that, that allowed AMD to come in and steal some of the market share. And in history, AMD has been always known as Intel's the little brother to Intel. And you also told us about AMD shares that could be rising because of these recent revelations. Now, what else can you tell us about this article?
Well, I first want to correct what you said about chips overheating and Intel not saying anything about it. Intel Intel actually did say something about it. So the problem with the chip was that a bad guy, a threat actor, could actually send an attack towards your computer, and if your computer had that chip, then what it would do, it would basically send the chip send the chip into a tizzy,
Mm,
so it'll overheat.
okay.
So they can do that to exploit you. And what that would do to your computer or your laptop, especially, it would make it get hot for one, and number two, it would just lock it up because it's too hot to operate. So that's the correction I just wanted to make.
Okay.
So they've acknowledged that this is a problem, but there's not very much that you can do other than swap the chip out for a new one or something like that. And big businesses don't like to slow down their technology just on something like this. So that's that's the first part. Second part is that AMD does have a faster product for what it is. Um, and for the foreseeable future. So they can ride this wave for the next 9 months, for the next 12 months. We don't even know if Intel is guaranteed to have their chip ready by second half of 2019. Second half or second quarter is usually around June. So the May June timeframe is right where they're thinking of that they'll have their product ready.
Mm,
Um, I predicted maybe some weeks ago that when AMD was moving at $14, $15 a share, that it was going to shoot up to $20 a share. And then last week I mentioned that it would shoot up to $25 a share, and it did. This week it ended at the highs was $28. It went over $28 a share.
wow.
So with the way things are going, by Christmas it can probably shoot up to maybe $50. I mean, we're in September right now, going into October, so you'll probably see it hit $30 by the end of the month.
That's
Maybe by after Christmas, you'll probably see it because there's going to be high demand for chips for building gaming computers and building computers in general. And everyone's going to be looking to go grab these new chips. So you'll probably see the value shoot up to about maybe 40 $40, I think.
okay. Now, when you say gaming, well, obviously, gaming computers need the best processors at the time. Do people, do gamers tend to make their gaming computers around the holidays, such as Christmas?
There tends to be sales for Black Friday.
Okay.
So it's not uncommon that you'll buy it. You'll see like a CPU and a motherboard, a case, a PC case, graphics card bundles, all coming from Newegg and Fry's and all these other micro centers and things like that. Best Buy will probably be pitching in on these kind of type of deals as well. So you'll see AMD just keep going, going, and going. And if they're saying second half of 2019 is when Intel is going to get their product ready, that's a long time in the PC world. That's a long time. So what can happen here between now and second half of 2019? That stock can shoot up to $100 easy. I mean,
That's
Intel is moving at $46 right now as we speak. If you look at if you scroll up the page, it kind of shows it. But
that's
Intel's
like
only Intel's down right now to $46, and AMD's up to $28 or $27, I think. So if Intel can't officially work its process out, and AMD just keeps moving, AMD can easily overtake Intel, even though there's more Intel shares in the stock market. This can increase AMD shares dramatically. I know I'm in. I'm all the way in on AMD.
Those gains are like crypto gains.
The volatility.
Yeah,
Well, I think crypto games tend to have high highs and low lows. And if we look at the docket, if you anybody who's watching is looking at the docket, you'll see that it's on our docket as well. That crypto's actually down.
yes it is.
Let's move on to the next article.
All right. Excuse me. Our next article comes from Bitcoinist.com. Title: Silk Road Sell-Off. 800 million Bitcoin wallet sees mysterious movement. All right. Written by Wilma Wu. Written September 3rd. Article: Bitcoin community members continue to piece together the story behind a huge wallet containing over 111,000 BTC, worth 802 million, which suddenly became active after over 4 years. Wow. Coins go to Bitfinex and Binance. The results of multiple analysis by Reddit user U6 Silk revealed the owner of the wallet, which first appeared in May 2014 with a balance of 111,114.615 BTC, worth 802.4 million, has begun actively moving coins to destinations including exchanges. On the original hoard, 11,114 BTC, worth 80.3 million, has transferred to a Bitfinex wallet, while another 4,421 BTC, worth 32 million, has gone to Binance. This represents 14% of the original funds and more than 110 million, the user notes. As commentators consider the whether this fresh activity marks the start of a sell-off or the gains stash of Bitcoin, others continue to examine the origin of the funds and the possible identity of the wallet's owner. Several theories devised by U6 Silk remain open, including links to the now defunct dark web marketplace Silk Road, a Mt. Gox cold storage wallet, and self-confessed Satoshi Nakamoto Craig Wright. The wallet could also belong to an anonymous major bag holder. Bitcoin markets rise. As Bitcoiners has reported, Bitcoin markets has traditionally tanked as a result of large chunks of funds being traded for fiat currency. Mt. Gox, which continues to process refund requests from users who lost coins in the 2014 hack, had begun a round of huge sell-offs from November 2017 to reimburse collectors, a policy which has now ended. At the same time, the wallet analysts came to light a fresh controversy swirled around Wright and a handful of other cryptocurrency industry figures regarding claims he is Bitcoin creator Nakamoto. For now, attention appears to be focusing on Silk Road, while the possibility of the wallet's owners selling large amounts of Bitcoin failed to shake market confidence over the weekend. BTC USD pairings conversely climbed to hold above $7,200, its highest peak in almost a month. All right. Since that 7,200 peak, Bitcoin has fallen to the 6,000 range. This sell off, obviously, they don't know who is the owner of this wallet. Obviously, this person been around in the crypto markets at least since 2014, maybe sooner, to acquire this much BTC. That's a lot of BTC that's apparently is going to be sold or being sold off. And with that type of sell off, yeah, I can see how the market can tank a little bit. Um, yeah, that's all I have to say about that one.
What's interesting about that Mount Gox situation is that a lot of people don't realize that the crypto market does not have FDIC in place.
Correct.
So if you lose, you lose. That's it. It's a risk. It's a gamble that you're gonna take. So and pertaining to this article, seeing that 800 million are just being sold off, and you don't really know who's actually doing it per se. kind of makes some people who are not savvy wary about getting involved in it, but it should not. There's a lot of people who are hodling for quite some time, and then for whatever reason they decide to make a turn.
Hmm. Yeah. They said the wallet did not see activity for 4 years. That's a long time to hodl. That's some strong hands there. But to give people an example, what we mean holding for a very long time, case Ripple right now it's about 33 cents. And you buy, what, let's say 1,000 Ripple. And you say, okay, I spent, what, 300 some dollars. And 4 or 5 years later, the Ripple's up to 500, $1,000. You maybe forgot, not forgot, but just it was in the back of your hand. You say, back of your mind, you say, wow, I got 1,000. 1,000 is a million. So you move in this Ripple. So just to give people an example of what we're talking about, back in 2014, nobody knew that Bitcoin would be this much. People say it can be 10, 15, $100, but you know, $6,000, 7,000, $20,000. That's a lot of money, man.
Yeah, and you have the people whoever had that wallet and sold off that much was a whale. That wasn't some regular guy, sitting behind his computer, jacking off. That was a big whale. 800 million is a lot.
A lot of money. You could do a lot with $800 million.
That was a big whale. That wasn't Max Kaiser. That was somebody bigger than Max Kaiser.
Yeah, and to me, I'm thinking, yeah, he may have forgot about it, or at when Bitcoin went up to $20,000, he may have wasn't he may have maybe forgot how to get into the wallet or whatever the case may be, because to me it seemed like this person would have sold some Bitcoin when Bitcoin went up to 19, $20,000, not now when it's $7,200 and $6,000 range. So again, the article said it didn't see any um, action in 4 years. So yeah, that was a big person. That was a big whale right there. That was a blue whale. All right. Let's get back to go to our next article. This one's from Forbes.com. Titled Bitcoin is in free fall, dragging Ethereum and Ripple with it. Here's why. Written by Billy Bambro. All right. Article. The Bitcoin price went into free fall this morning, despite good news for Bitcoin adoption from the growing Lightning Network, as investors get cold feet ahead of the U.S. Security and Exchange Commission's, or SEC, decision expected later this month on whether to grant approval for a Bitcoin Exchange Traded Fund, or ETF, something the SEC has previously rejected due to fears around Bitcoin's wild price swings and price manipulation. Bitcoin fell to some $500 or 5% by fell by some $500 or 5% in just a matter of minutes, according to CoinDesk data, and taking the Bitcoin price under the psychological $7,000 mark. The sharp fall in Bitcoin price comes from unconfirmed reports from Business Insider that U.S. investment bank Goldman Sachs is ditching plans to open a desk for trading cryptocurrencies due to murky regulatory landscape. BI reported, quote, Goldman has moved plans to open a desk for trading cryptocurrencies further down a list of priorities for how it can participate in cryptocurrency markets, according to people familiar with the matter, end quote. In response, the bank released a statement. We have not reached a conclusion on the scope of our digital asset offering, it said. Regulators around the world have been grappling with how to properly regulate Bitcoin, cryptocurrencies, initial coin offerings, and cryptocurrency exchanges. Last year, the SEC warned that some of the coins issued in ICOs could be considered securities, meaning trading them would have to comply with federal security laws. Goldman Sachs' moves come after the Bitcoin and wider cryptocurrency token price has been well supported by news this year that institutional money was about to get into crypto, and many will now be questioning whether that money is really on its way. Earlier this year, the new chief executive of Goldman Sachs, David Solomon, signed the bank signaled the bank is looking into addition to adding further Bitcoin and cryptocurrency services to its portfolio. In an interview with Bloomberg, Solomon said the bank must evolve its business and adapt to the environment. Bitcoin bulls are also trying to hang on until early November, with the New York Stock Exchange's parent company, International Exchange, or ICE, plans to roll out a Bitcoin ETF as part of its cryptocurrency platform, backed and in partnership with the coffee chain Starbucks, software giant Microsoft, and Boston Consulting Group. Yesterday, CEO of crypto payment startup Abra told CNBC the reason the SEC has insofar denied crypto ETF is because the crypto industry does not fit the applicant's archetype. Bill Bart, Bill Barheit suggested that the SEC has rejected crypto ETF applications because people who are doing the applications don't fit the mold of who the SEC is used to approving. It's been suggested that the introduction of a registration process for popular instant Bitcoin exchange Shapeshift may have spooked some users and added fuel to the sell off. Bitcoin climbed to an eye-watering near $20,000 late last year, but has been heavily sold off through 2018, dropping to year-to-date lows of around $5,800 and sparking a wider sell-off of the wider cryptocurrency market. Elsewhere, the major cryptocurrencies, including Ethereum, Ethereum's Ether, Ripple, Bitcoin Cash, and EOS, were also hard hit this morning, all falling at least 10%. The fortunes of most cryptocurrencies have been closely tied to Bitcoin this year. Ethereum's sell off has been largely attributed to the huge number of ICOs that went live on Ethereum's blockchain last year, with many of those investors bailing out through 2018. All right. There's been speculation, well, not speculation, talk of a Bitcoin ETF coming, and when that Bitcoin ETF comes, then that means institutional investment will come into the cryptocurrency sphere, and Bitcoin will then skyrocket or go to the moon. Some people speculate that that's good. Some people speculate that's bad, such as Andreas Antonopoulos. But this sell-off, there's been many stories or speculation why Bitcoin sell off this year and the recent sell-off from $7,200 to 5,000, or currently right now in the $6,000 range. I have no concrete answers. What I have to give are also speculations. But this, excuse me, this article, we'll read the article title again. Bitcoin free fall, dragging Ethereum and Ripple with it. Ripple fell from about I'm say 3 dollars and 60 cents to about 33 cents. Not Ripple, Ethereum fell from about 1,500 to about 200 something dollars. That's quite a big fall, along with other cryptocurrencies. But Bitcoin, I have no reason why it fell from 20,000 to the lower $5,800. Any other comments on this, Mike?
Um, I guess I'll comment on the ETF portion. Is that this is the only way that the big institutions can actually get involved in Bitcoin without being regulated by the SEC and the IRS. So I don't think that's going to spike it.
Test.
But I think what that will do is
What's going on, Dollar Will? We hear you.
$1.
I'm sorry about that. Go ahead, bro.
Yeah, I don't think that's going to spike up the price of Bitcoin. What I think it will do it'll allow other coins to actually get circulation in the market. So like your Ethereums and your light pays, so to speak, coins that should matter will actually get some traction and get some relevance that they weren't getting before.
Now,
Because it's not just the
go ahead.
coin. It's not just the coin itself, but it's the blockchain behind it. What kind of which version of the blockchain is it using, and how is it being used? And that's what's going to create the the stability for it.
The psychological barrier that the article spoke about, the $7,000 psychological barrier, that's real. That's real. When Bitcoin hit $10,000 last year, October, that's when it just shot up. I remember it just shot up. And also another psychological barrier that the article pointed out. It says Bitcoin bulls. I know my screen's not shared. It's just a paragraph. Bitcoin bulls are also trying to hang on until early November, with the New York Stock Exchange's parent company, ICE, plans to roll out a Bitcoin ETF as part of its cryptocurrency platform backed. Now, you said, and I, of course, it's true that Bitcoin is not certified with the $250,000 guarantee, like such as your banks.
FDIC.
This, yeah, FDIC. I don't know why I want to say FINRA, FDIC. When, let's say this comes out, because they can also change their mind. Let's say this comes out. I'm not saying it's going to spike Bitcoin. What I am saying is I believe it could put some more trust into the cryptocurrency market. Anybody else?
Yeah.
Dollar, what are you doing in there?
Hello, everybody. Let's see, everybody. Let's see. Try to shift your mind to the technical side now. You've heard excellent fundamental analysis, and so when I come on, I'm not disagreeing with anything anyone has said. I'm just speaking from a technical standpoint. People should separate the volatility or the weakness in Bitcoin from the viability of Bitcoin, because Bitcoin is a currency and currencies go up and down. And if you look at a price chart of Bitcoin, irrespective of the price movement, you notice that it's quoted as, the symbol says BTC/USD. So that means that Bitcoin is quoted as relative value, relative to the US dollar. So when the US dollar is strong, anything you see quoted against it is going to be weak. So the reason, from a technical standpoint, the reason Bitcoin is falling and is weak is because of dollar strength and anticipation of even greater dollar strength. It's the exact same argument for why gold and silver is experiencing weakness. So gold, silver, Bitcoin, they all have a common enemy, and that's the US dollar. So people should not necessarily get skittish about Bitcoin just because it's falling. It's a part of Bitcoin is a financial instrument, and the currency market and all of those instruments are evaluated relative to other currencies. So
I see what you're saying. Because the dollar is strong, then Bitcoin
yes.
against the US dollar is going to be weak, such as the gold. And okay, I see. And
Yeah, think of it this way. The symbol is quoted BTC/USD. So think of it as using Bitcoins to buy US dollars. If the dollar is getting stronger,
why do
then
that?
that would require more Bitcoins to buy, more and more Bitcoins to buy the same amount of US dollars. So you're throwing good money after bad. You're in the losing side of that equation. Is that making sense?
Yes, to me, yes.
So if the dollar is falling and you're using bitcoins to buy dollars, you're getting more dollars with each of those transactions. So that would be good for Bitcoin. So when in the currency market, everything is quoted as a pair. It's BMW versus Mercedes. It's
Hmm.
like, so what's the value? Is it going up or down relative to the other? Pepsi versus Coke. So in the currency world, we always think and trade in a relative sense. It's you have to look at the currency pair, and you'll notice that most cryptocurrencies are quoted relative to the U.S. dollar. So that's reinforcing. It's even more important now, even before cryptos came on the scene, to really stay focused on the relative value of the U.S. dollar versus energy, metals, and now cryptocurrencies.
Okay. So
And
go ahead.
to Dollar's point, he's right that the most of the cryptocurrencies are weighed against the USD, but they're also being weighed against the euro now too, as well as the yen, because Japan and Southeast Asia are heavy investors inside the cryptocurrency market right now. They're actually the ones that are moving it, and not the Americans or the West.
Correct. So when you see the currency pair, you have to think in terms of that's two instruments. So you really have to kind of have a sense of what each instrument is doing. Which one is trending up and which one is trending down, in order for you to decide if you want to go long that instrument, or meaning bet that it goes higher, or if you want to short the instrument, bet that it goes lower.
Okay. And when the USD falls in uh price, then it I don't know how I'm trying to say this, but you said it before.
You got it. Go ahead, finish. I think you got it. Let it out.
Okay, when USD falls in price, then that'll make the BTC strong because it's like a seesaw, which means it'll take less Bitcoin to buy US dollars.
Correct. Yes, and you're richer over time by trading, uh, by using a stronger currency to buy a weaker one. You're richer. That's good for you. You don't want to use a diminishing currency to buy a stronger one, because it takes more and more every time you buy,
Okay,
because the value of the thing you're buying gets more expensive every day, periodically more expensive, and the currency you're using to make the purchase with is getting weaker all the time. So you're on the losing end. You're throwing good money after bad. It's not a winning trade, and so that's the pressure that Bitcoin is facing, right? Cryptocurrency. I don't want to pick on Bitcoin, but Mike is right. There are other currencies too. So you have to look at how the currency is quoted, and you have to have an opinion about the trend direction of both currencies in the quote.
gotcha. Any other points on them? All right. Our next article or doc is from businessinsider.com, but since it's behind a payment wall, we're going to go to ptcmanager.com to speak about the same article. Title: Coinbase explores potential ETF as partnership with $6 trillion asset manager BlackRock. Written by Nigel Dolintas on September 7th. Article: Coinbase continues to make strides in what they can offer thanks to new deals surrounding a potential Bitcoin ETF announced September 6, 2018. Coinbase has enlisted help from BlackRock, an asset manager that handles over $6 trillion for this endeavor. ETF could help bring crypto investing to the masses. Coinbase made headlines earlier this year in regards to their index fund, but is only accessible for accredited investors. Only users with a minimum annual salary of $200,000 or has a net worth exceeding $1 million without housing can participate in the weight index fund. The current composition is Bitcoin 76%, Ether 15%, Litecoin 2.21%, Bitcoin Cash 6%, and Ethereum Classic 0.81%. With a new yield study claiming that all portfolios should have a 4 to 6% allocation in Bitcoin for optimal construction, an ETF would greatly make investor jobs a lot easier. Cryptocurrency has also been shown to have a negative correlation with trading assets, which will benefit investors looking for as much. An ETF would allow a more mainstream audience to receive exposure, and the rush of the new money would put tremendous upward pressure on the market. Users could begin putting crypto exposure into their 401ks or IRAs, which could help users tax shelter which could help users tax shelter gains made. Other companies know the tremendous positive implications of a Bitcoin ETF would have for the community as a whole, and many have tried. So far, the SEC has denied all applications for approval of crypto related ETF and even rejected 3 ETF applications in July 2018 alone, Coinbase and BlackRock. While it is known that Coinbase has held conversations with members from BlackRock in the last couple of weeks, it is still a mystery if these were a one-time engagement or an ongoing dialogue. While BlackRock has expressed zero interest in entering the cryptocurrency industry, BlackRock's blockchain group has been involved since 2015 with the task of identifying potential blockchain applications within the fintech sector. While BlackRock's CEO has expressed zero interest in entering the cryptocurrency industry, BlackRock's blockchain group has been involved since 2015 with the task of identifying potential blockchain applications within the fintech sector. BlackRock also began offering their clients the option to expose themselves to Bitcoin related investments in July 2018, while the CEO made positions in 2017 claiming that Bitcoin was, quote, an index for money laundering, end quote. The company's position has since then reversed, with financial heavyweights like CBOE, CME, Goldman Sachs, and several others recently begging to offer their respective clients cryptocurrency services. BlackRock simply would have been left behind if they hadn't done the same. No word on a potential timeline or proposal submitted to the SEC is known. If successful, the number of newcomers to cryptocurrency will come rushing in due to the number of people that may only exclusively use Coinbase. And the other week, we read an article that said Coinbase has been signing up 50,000 new users this year. I think a day. I think the article mentioned a day, 50,000 a day. All right, who has anything to say about this article?
Only thing I would like to say is the obvious that BlackRock is a whale, so they don't really, whales don't come much bigger than that. They are a money management firm. So they manage money of some of the richest people, and they also manage money of like I believe they're into pensions and retirement accounts for major companies. So if they are in on something, that's like that's as big of a whale as say Goldman Sachs. They don't really come much bigger than that. So
Yeah.
we're gonna get an ETF one way or another. I can't see it not happening. It's just it makes too much sense, and all the the whales want it. I can't imagine the whales not getting their way.
Yeah, to add on to what Dollar Will was saying is that they if you look at the article actually states that they have a Bitcoin investment group. I think is I'm just kind of paraphrasing. They have a whole entire staff dedicated to just that. So that means that they're in it for the long haul. If they're in it for the long haul, that means that this is going to be around for quite some time. And I think what I dislike about some of these articles is that they interchange cryptocurrency with Bitcoin all the time, and they make it seem like Bitcoin is the only cryptocurrency available when there's probably 2 dozen coins that are still relevant on the market right now that are
Mm-hmm.
not being mentioned and should be mentioned. It's unfair that Bitcoin gets all the attention while all the other coins just have to sit there and kind of ride the bench, even though they have some stake in the market as well.
Yeah, that's unfortunate, but I still think, but that ETF is coming, and I think it's going to end up being a great thing for the country at a time when we have large numbers of people in the country who don't have a retirement account or have an underfunded retirement account, and and it seems that the people are poised to get in Bitcoin at the right time, which is not now, which is great that people have kind of you don't hear much talk of hodling anymore, but I think that the people are tuned in, that they are listening to various forecasters, and this is going to be a shot in the arm that is going to come in, going to be right on time for a lot of boomers and older people who don't have healthy retirement accounts. So I think it's going to be a great thing.
All right. Let's get to our next article. This one comes from Ethereum World News. Fifth largest bank in the world, Mitsubishi UFG, explains how using Ripple saves time and money. Written by Jose Antonio Lanz. Written last updated September 4th. Article. Ripple continues to gain praises around the world, proving that it is one of the most important companies in the world of cryptos and blockchain technologies. The developer of the third most important cryptocurrency in the global market cap has consolidated itself as one of the few options that has brought the traditional financial markets closer to the use of tokens developed under DLTs or distributed ledger technologies, aka blockchain. Ripple added another positive experience to its long list of strategic partners after being recognized by a representative of Mitsubishi UFG Financial Group Incorporation as one of the most successful options. They have proven to process payments quickly and economically. Mitsubishi UFG Financial Group is the fifth largest bank in the world by total assets, 2,784,000,000, with a larger capital base, wow, than that of other consortia such as JP Morgan Base and Company, which is number 6, Goldman Sachs, which is number 35, and even Santander, which is number 16. If you all who's listened to this never heard of Santander, Santander, I believe, is an Italian bank, which it is worth noting has also had positive experiences with Ripple. Ripple, possible alternative to Swift. In an excerpt from a conference published by Stephen Deep, a representative of Mitsubishi UFG Financial Group Incorporated, commented how Ripple technologies can provide better results than other alternatives such as Swift. Quote, today, for many of us, we may have to go through Swift and encounter charges. Many intermediary banks are part of that, and typically an SLA for a fund transfer or movement is between 1 and 3 days. Using technology such as Ripple, we can get that done to something like 30 seconds, which is significantly different and at a cheaper cost, as well in terms of moving money between our branches, between our different countries, within our network. That's really important to us, end quote. He commented that despite evaluating several possibilities, the multinational firm is quite satisfied with the results obtained through the use of Ripple's technologies. Quote, Ripple is one of the solutions that we are concentrating, not the only one, but one that works, end quote. Um, that's the end of the article, I believe. No, it's not. I apologize, people. Mitsubishi and Ripple, a partnership with actual results. He also commented that Mitsubishi UGF owned 3/4 of Grunts, Grunks, Krungsri Bank, which is the fifth largest bank in Thailand. The bank has been the leader in terms of Ripple implementation, with successful and proven practical cases. In the case of Krungsri, one of the biggest achievements was made through payment processing with a major petrochemical company during September. Another important case of Ripple's technologies being applied by the financial giant was thanks to Krungsri and Mitsubishi Corporation. He concluded by explaining the case while mentioning the financial giant's optimism in implementing blockchain technologies as a way to evolve the payment system they currently manage. Quote, just in May, Krungsri revealed a successful pilot test with Mitsubishi Corporation, one of our customers, between Mitsubishi UFG Bank and Standard Chartered, moving funds from Bangkok to Singapore very successfully. We did this under Thailand's regulatory sandbox. We are still in trial stages, but our interest is absolutely to build this towards something real that we can use within our group. All right, a few things. There's a link which stated Ripple strategic partners, and I believe it shows Ripple's. No, it doesn't. I apologize about that. Now, weeks ago, we read an article which about Western Union and how the CEO of Western Union was saying that, oh, Ripple's wasting time. We tried it. It didn't save us money, so forth and so forth. But you have the fifth largest bank saying, yes, it saves money. So to me, that says that guy was full of it. Two, if anyone don't understand how Ripple works, what it is, if we're in, let's say I want to send money from DC to Bangkok, or you say Bangkok. Initially, you will send the money through the bank, and it'll go through other banks in order to get to Bangkok, which it would be a few days. That's on the weekdays, but if you send it on a Friday over the weekend, that person may get the money by Tuesday or Wednesday. Um, Also, there's remittances when people want to send money back to Nigeria, Kenya, India. That costs money. It's a high fee, and also it takes time. With the Ripple network or X Rapid, Ripple is the company, X Rapid is the system. What it will then do, since it's a distributed ledger technology, blockchain is distributed, what they'll then do, you would transfer the funds that you want to send to Bangkok. You would transfer that funds to Ripple. You would then send that Ripple through the X Rapid system to Bangkok, where you would then change that Ripple back into um, the local currency. I know some people will say, well, the crypto market is too volatile, but the time in which that money is sent is only a few seconds. There's been studies that said that may have said the forex market is also volatile, but anywho, that's how you will send funds from one place to another using Ripple. And any other points on that?
It's also important to note that blockchain works at the speed of the wire. So, um, however fast the wire is how fast the is how fast your transaction is going to be. So the article pointed out 30 seconds, but 30 seconds is a very high level optimal guesstimate. It can be as low as just under 10 seconds. I mean, just as fast as it takes for you to open up your web browser is the time or the duration of a transaction on a blockchain.
Mm.
And the article didn't say, but I'm wondering if it's free, if the service is free to members of that bank. Because I was thinking about what when you referenced Western Union, and I was thinking if just as we can do ACH transfers right now, and it generally most banks don't charge anything when you do that. So if Mitsubishi Bank isn't charging anything for transfers using Ripple, uh, and if your Western Union and your business model is based on charging a fee, and here are banks doing your job and not charging a fee, you wouldn't be in a big hurry to replace the archaic system that is the basis of your existence.
Good point.
Right. I think they make about 65 cents on the dollar per ACH transfer. So
Mm.
that does become lucrative when you start sending money overseas or just making constant transactions. You know, people who don't have bank accounts and need to pay their bills, you know, they're constantly running to Western Union or checks cash to actually do all their banking. In reality, you know, that's how they stay in business. But if you have a new online banking system, and PayPal comes to mind as being the originator of internet banking, um, your your lack of transition can be your downfall.
Mhm.
Right. And since Western Union is primarily that's pretty much their core business. And so now it's like money transfer is like a instead of being a business, it's sort of going to become like a value added service just for being with a bank or some other larger financial institution. So basically, it sounds like see if I'm making any sense, what what Western Union, their whole reason for being is now just going to be given away for free by other financial institutions.
Absolutely, they can go the way of the CD and the tape makers. You know, your Memorexes, your Maxwells, your TDKs. Nobody needs you anymore if I can just download an MP3.
So if Western Union doesn't come up with another service, a unique service to offer that they can charge for, then they don't have a reason to exist.
Exactly. You could see the
Yes.
winding down of the brick and mortar of Western Union, because I'm pretty sure they pay a substantial amount of money for renting out these places because they don't own these places per se. They actually just renting them out and leasing out the property. So that's got to be costing them a lot of money, and I can't foresee how that can be a sustainable business from a brick and mortar standpoint unless they go completely into an online standpoint, unless they get snapped up by somebody like Amazon.
Ooh,
Right.
that's a
Like,
good one.
so let's see. Let me see if I'm putting this together right. I mean,
Yes.
okay. So when I go in Walmart, I always see the lines over at the at I guess their MoneyGram service. And in past shows we talked about what was the credit card company that was going to allow cryptocurrency and US dollar?
Mastercard.
MasterCard.
Massacre.
Yes.
Okay, so why would anyone need to go to MoneyGram if they can just get in line at the cash register and short with their pop their Mastercard in, and just as you pay for your groceries with your Mastercard right now, and they ask you, would you like cash back? There'll probably be a different screen asking you if you'd like to transfer money from dollars to Ripple right on that same device. So why would
Or if you're already
MoneyGram?
holding, if you're already holding cryptos, then that would make sense. But if you're not already holding it, then it's not going to make any sense, right? Because the dollar is too strong to be using cryptos as an alternative currency in your own country. Um, but if you're already holding, let's say Mastercard says, well, if you spend, if you use your Mastercard to buy this many items at Whole Food, or you spend this much money at Whole Food, we'll reward you with some tokens or some coins. Then that's different. So then you can hold coins better that way than you would be able to go out and buy coins just so you can go spend it somewhere else. That just doesn't. It's not. It's not a an efficient way of using cryptocurrencies.
Got it.
How you doing, Jack? How you doing today?
What's going on, Jack?
What's going on, brothers? I'm doing
What's
good.
up, Jack?
Dollar will, y'all. What's up, man?
I like that.
I like that.
Nah, man, but I'm just soaking up, man. Just listening. I'm not too knowledge on too much cryptocurrency, but to me it looks like uh kind of that's the wave, man. This was that last article. I guess the fifth largest bank. I guess that was in what country that was in?
That was
That's,
Japan, right? Mitsubishi.
And then
yes.
Mitsubishi. Yeah, but they kind of like they said it was efficient. I think the main thing with cryptocurrency is about application. You know, just like Bitcoin, they're using that in reciprocal you know, it's in government stuff like that. I can't say this word right, but you know, just mere fact they use it in their operations and they're saying that's effective. You know, is giving it more. It solidifies its position more in the financial realm as you know this is a solution uh to their business. So I think it's the wave. And do you guys think that as far as, you know, there's a problem with, you know, people are scared about, you know, the retirement and certain things like that. You think that's going to be the new form of investments, is putting it into cryptocurrencies as far as retirements, you know,
Yeah,
instead of the stock market?
yeah. You'll probably see like Social Security backed crypto ETFs or something to that effect to compensate for the lack of currency that is being printed, like lack of dollars that are being printed because there's not enough to go around. You don't have enough people putting back into the system because of the lack of jobs. So that's why you have this immigration issue where they're bringing all these people in that they work, and they pay taxes, but those tax dollars that are being paid are actually being used to subsidize Social Security.
Mm. Now you think it's gonna be more push? It's gonna be pushed more towards African, not African, but currency that's backed by uh a high amount of resources like Africa or like yen as far as not yen, but China as far as the workforce, like countries with a high amount of resources. You think that's going to put the more of the money in and watch it grow from there, or what do you think is a great solution as far as um like which particular currencies to back it up with to invest in? What do you think is going to be the standard?
I personally foresee, and I'm not I'm not a CPA, so you do your own research, but this is just my personal opinion for
Yeah.
people who are listening. I foresee that Bitcoin will be gone in the next 5 years.
Mm.
I don't think Bitcoin will be sustainable. I think there will be a bubble. I think it will pop and something else will replace it. What that something else is, I don't know right now. It could be a variety of coins. There's probably 2 dozen coins on the market that are actually valuable outside of Bitcoin that not so much replace it, but would actually be usable in other areas. Because Bitcoin is just so hard for the average consumer to actually obtain. So at this point, we don't know where it will be after the next week or so because of the downturn. But what I'm saying here is that in terms of where how it will be used, I think the utilization is complemented by your resource, your natural resource. So I saw Russia. I think we read about this article last week, but Russia is actually working on backing cryptocurrencies up with gold link sources. So basically, Russia has about 800 tons of gold, and they're gonna tag it with crypto, which makes it easy to balance out the value of what the crypto would be. And you could do the same thing in something like what do you call that? Where they have those diamonds in Africa? The Congo,
Conflict diamonds.
right? Excuse me.
The conflict diamonds.
Yes. Right.
Now,
So what I'm saying is those what I'm saying is those diamonds, that cobalt, you can start to justify being paid in an alternative currency such as crypto by utilizing those resources. And if anybody wants those resources, they have to pay you in that national cryptocurrency that they're holding, and that national cryptocurrency gets around the SWIFT system that's in place that the U.S. and the U.K. and France uses to put sanctions on people. I mean, on nation states as well as people too, because even in Turkey, they don't have sanctions on Turkey, but they have sanctions on certain individuals inside the Turkish government, which sends the the currency into a spiral, and now all of a sudden you're in crisis. So that's where cryptocurrencies come into play.
Now, I want to say that when you say in your opinion that you don't think Bitcoin will be around, for the people that's listening, we're not saying cryptocurrency will not be around. Again, crypto, I understand Bitcoin is synonymous with cryptocurrency, but Bitcoin is a cryptocurrency, one of many. So Mike say in his opinion, he don't think Bitcoin will be around. We're not saying that cryptocurrency won't be around. We're just saying Bitcoin itself.
Garner Dan,
What's going on?
What's going on, brother?
How you doing?
I'm doing good, man. On this late night grind.
What's happening, brother?
Thank you for joining.
Yes.
Come again?
I just want to throw out something out there from when Jack came on. You know, anybody out there listening, you know, we're all at various levels of understanding of cryptos and the various things. So don't let, you know, what you think you don't know keep you from getting into the getting on the panel, getting into the conversation. You know, read along. You know, get into the habit of reading up on these things and just jump in with us. We're all learning together. That's what this is for.
Yes, and always, all the links we discuss will be in the description of all videos. Any other points? All right, let's go ahead and get to our next topic on the docket. This next topic, this next topic comes from newsbtc.com. Title: Cryptocurrency remains safe haven as economies of Venezuela and Turkey collapse. Written by Nick Chong, written September 4th. Article: Critics of crypto often talk down on the asset class due to its volatile nature and price instability, unpredictability. Hey, I think Ghana Dan, can you mute yourself real quick? However, in countries prone to economic instability, crypto assets can prove to be a safe haven in periods of rampant inflation and flawed monetary policy. Crypto, an unexpected safe haven in times of economic distress. The citizens of Venezuela have indisputably had a rough year, with their Venezuelan bolivars inflating by upwards of 100,000% to become nothing more than paperweights. Although President Maduro is making moves to combat hyperinflation, some claim that it may already be too late, as citizens throughout the South American country have already fallen into financial ruin. Keeping this in mind, Jean Bain Ham Hurd, the head of strategy at Blockchain, bristling brought up an interesting point about how digital assets can operate as an alternative to stable fiat currencies or as safe haven assets such as gold. Regular people in inflation prone countries like Venezuela, Turkey, Iran, and Zimbabwe are seeing their life savings disappear. They don't have easy access to stable fiat currencies or safe haven assets. This is why we need stable digital assets that are universally accessible. While it is widely accepted that stable digital assets or stablecoins, as they are more well known, can be a valid alternative to safe haven assets, US dollar and borrowed gold, etc., there are some individuals that claim that regular crypto fit the role just fine. As reported by News BTC previously, Bitcoin has outperformed three government issued cryptocurrencies. Excuse me, I apologize. Read that again. Bitcoin has outperformed three government issued currencies year to date, even though the price of the foremost crypto asset has not fared well in recent months. So, although Bitcoin has tumbled from 17,000 to 7,300 since the start of 2018, if given a choice, citizens in hyperinflating economies would rather take the brunt of Bitcoin's volatility than see their fiat lose purchasing power in front of their very eyes. This evidently explains why citizens in Venezuela and Turkey have recently sought solace in cryptocurrencies as a way to preserve their assets and to buy and sell items without a government intermediary in fiat. What's next, however, is making cryptocurrencies universally accessible for the over 7 billion individuals on the planet, as this will be sure to drive the adoption, growth, and maturation of this world changing innovation. Venezuela is down, could the US be next? Although the US dollar and crypto have proven themselves to be invaluable assets in Venezuela, Kim.com, a well known entrepreneur, internet freedom fighter, and anti government proponent, claims that the US dollar is also subject to losing a majority of its value. In a tweet that gained traction across the cryptosphere.com wrote, "Trust me, the crypto and gold, buy crypto and gold, your USD will become worthless. With US economic collapse, all old money currencies will crash. Times will get tough, but you'll be fine if you hedge some of your assets in preparation of the crash." This belief may seem like excuse me, I can't pronounce words tonight. This belief may seem like irrationality at its finest, but with US federal debt racking up like no tomorrow, many believe it is just a matter of time before the American government will have to default on its over 20 trillion of debt. Following this speculated event, proponents of both anarchy and blockchain-based assets claim that worldwide legacy markets will collapse, leading to a society where the use of cryptocurrencies is the norm. Some cryptocurrency advocates aren't so cynical, claiming that the widespread adoption of cryptocurrencies can be had via the gradual development of these assets. Regardless, one thread remains, which is that cryptocurrencies will eventually hit the public spotlight as a tool that can be used in day-to-day activities. All right, cryptocurrencies remain safe haven as economies of Venezuela and Turkey collapse. Any comments on that, gentlemen?
Well, I just mentioned all of this just in the last article, right, a few minutes ago before you started reading this one. So
Mm-hmm.
This is the path that most nation states are going to go down. Um, it makes sense to get around the sanctions, to get around the Western banking system of SWIFT, which exists out of Europe. It becomes a problem. Your 401ks, your retirement funds in your native state disappears because somebody in Washington D.C. or Brussels or inside London decides that they don't like what you're doing. I think that's a bit unfair, and sanctions are always seen as the first act of warfare. It's a soft form of warfare. So if you're looking to park your money into something a little bit more secure, as I know the previous articles that we've read that Lionel has been gracious enough to read show that Bitcoin and some of the currencies are down in the market, there's still a safe haven for for parking your money.
Anybody else?
Yeah, well, that what Bob, when I hear the terms stable currency, safe currency, uh I have to disagree with you, Mike. I think that's an oxymoronic term. There's no such thing. There is no such thing. Unfortunately, there is no place you can put your money and it's just going to be safe. There is no set and forget it when it comes to your money. There is no way around learning how to read price charts and knowing how to look at the charts of various currencies, including cryptocurrencies, the dollar, and gold. This is basic, essential financial defense, self-defense. There is no such thing as safe currency. There is no such thing as a safe investment. It does not exist.
Oh,
Change is constant.
I don't. I
go
don't.
ahead.
I don't think that's what I said, brother. What I was saying was that based on the article, they're saying it was a safe haven. So
Yeah, no, I was
in
responding.
reference,
I was responding more to the spirit of the article. Not that you did this, but the article implied that these that these cryptos or these currencies are being sold as safe and stable, or an answer to the volatility that countries like Zimbabwe and various countries have experienced. There is no solution for that. There will always be volatility.
To for the people that's
I,
listening,
Again, I'm not saying you said that, Mike. I'm just that's what they said in the article. I mean, you used the word safe, but I'm not saying that you meant in the vein that they did. That you crypto to say for any. I read it a lot. That proponents of cryptocurrencies believe that it's safe or safer. It's I don't think it is. It's just another vehicle, and your knowledge is your safety.
for the people that are listening to this, we don't mean to sound doomy and gloomy. We're just saying that there's volatility, and volatility just means the ups and downs, the peaks and the troughs. When you look at a graph, it's the ups and downs. And what we're saying here is things go up and down. When something is high, something is low. That's all. That's the only thing we're saying. We're not
Yeah.
saying, "Oh, put your money in your mattress or bury it in your lawn." No, we're
No,
not saying that.
no. I'm saying be a grown up, and you just like you watch after your car and other material things. What's more important than learning about watching your money? There is no safe way to put your money somewhere and forget about it. It doesn't exist.
I understand you. I'm saying that, but I'm saying regarding the article, it says here that the citizens of Venezuela have had a rough year with the Venezuela Boulevard inflating up to 100,000%. So it's like, wouldn't it be better just to throw your money into crypto? Because I've been watching, keeping up with what's going on over there, man. Those people are like people who are like upper middle class are literally like homeless now. So it's like, wouldn't it be better to just take their money and put it into that just to be on the safe side?
Well, just about all the cryptos fell too. So it depends on what there. It depends on what time frame you're talking about. Everything didn't go down. I mean, like the dollar has gone sideways for a long time.
Yeah.
You have that's why when you go to financial advisors, they talk about diversification, when one asset is experiencing weakness, typically there's something is strong, and that's why what's his name, James Kramer, he always said that somebody's making money somewhere. Always somebody's winning and somebody's losing, and it's only if you're doing the research and looking at charts of various asset classes can you stay on top of the game of who's winning. Fortunately, these trends in the marketplace last for years, not months. They last for years. even in some cases almost a decade. You know, gold has been declining since 2011. That's for 7 years. So that's the good news, is that it's not that you have to, that you're being whipsawed and the market is just, just completely random. No, it trends for almost, a decade before it changes direction again.
I want to
That's
make.
I'm
Oh, go
sorry. I
ahead.
just want to say that's why whenever when I look at charts, I don't look at daily initially. I start as far out as I can get. I'm looking 10, 20, 30 years. I'm trying to see how that instrument fits in the macro economy with the interest rate, the dollar, gold, oil, all those key assets like that. And so in those cases, if those people in those other countries, if they had the opportunity to invest in something else, you have to ask, why didn't they? Because I say it's because somebody misguided them into thinking that they could just blindly be safe by putting their money somewhere and not really learning about the market. That there is no safety in. I'm trying to find another word for ignorance or neglect. You can't be, you have to do the work. You have to keep your eyes open.
So you're
I want to.
saying, in other words, like when it comes to money, you got to keep yourself accountable. Make sure you know all angles. It's hard to me the way you trade is you'll look at the whole playing field, right? And you put the pieces together. You
Correct.
don't just look at one. You don't just say look at one thing, one piece. You'll look at 9 other pieces and say, okay, does everything connect? All right, good. Let me move forward. So that's how you usually make a decision, right?
Correct. I invest in industries, and
Okay.
I don't buy individual companies. I buy ETFs that's based on industries, and I study currencies and industries.
I want to paint a simple picture for the people that are maybe listening to this playback and learning some information but a little confused. The other one, I want to ask you one question. Usually, when the U.S. dollar is trending high, meaning it's getting stronger, that means usually gold is declining. Am I correct in
Yes.
saying that?
Yes,
All right,
let me just say metals. That'll cover it. All of it.
metals,
That's
s-
gold, silver,
silver.
copper, all
All
of
right.
it.
So when the dollar is trending high, usually metals are trending low. So what we're trying to get you to understand is this: when there's a strong dollar, smart people normally would buy weaker gold, well, weaker metals, because with a strong dollar, you can buy more shares of metals when the dollar
Well,
starts to
let me put it like this. Let me put it like this. If let's say you're coming out of a long trend where metals have been riding strong for 7 8 years, and the dollar is in the toilet. It's like where it was like in 2011. And when you see that strength start to happen in the dollar, that's when you kind of have to say to yourself, the party is over. I made a lot of money the last 10 years in oil and in metals. It's time for me to get out. That's when you either have to you short those items, or you invest in the dollar, or and you do research. You can find industries that move up when the dollar moves up, and so that's called correlations. You look for things correlated with either with or against the dollar, depending on what it is you're trying to do. So you have to see the market is it's like just a lot of interdependent parts. That was one of the first most important lessons that I learned when I first started trading, because I thought everything was random. It's not. It's not. There are things. It's like relationships. It's a series of relationships. And so once and it's not hard to you'll quickly learn what they are. And if you trade with those relationships in mind, then you'll be on the right side of the trend. Think of it this way: if a company uses metals to make their product, let's say an auto manufacturer. If the price of those metals is going up, then that means the price of the car has to, they have to mark the price up. So that means the overhead is greater to make the car. The car is costing more as those metals cost more every month. The price to make that car goes up every month. So you have to kind of, you could think of it that way. And so if the metals are going higher and the dollar is getting weaker, then the market could actually sustain that in an uptrend. But if the dollar changes direction, then the whole trend, the trade unwinds.
Okay.
So yeah.
Garnet, Dan, do you have anything you want to chime in on?
All right. All right, people. Let's get to our next article. I think we just went over this, didn't we? Yes, we did. I apologize about
That
that.
was our first article.
Yeah, I forgot to take it out when I reorganized the articles. All right. The next article comes from CNBC.com, titled Economy Adds More Jobs Than Expected in August, and Wage Growth Hits Post Recession High. Written by Jeff Cox, published 12 hours ago. Article long awaited wage growth posted its biggest increase of the economic recovery in August, while payroll gains beat expectations and the unemployment rate held near a generational low of 3.9%, according to a Bureau of Labor Statistics report Friday. Average hour, Average hourly earnings rose 2.9% for the month on an annualized basis, while non-farm payrolls grew by 201,000. Economists surveyed by Reuters had been goodness gracious had been expecting earnings to rise 2.7%, payrolls to increase by 191,000, and the jobless level to decline 1/10 of a point to 3.8%. The wage growth was the highest since April 2009. If we continue to see wage growth move higher, it puts the Fed in play for a fourth rate hike, absent tariff concerns, says Quincy Crosby, chief market strategist at Prudential Financial. I don't think this is going to be the beginning of a downturn in the market, but the fact is had been other reports leading up to this suggesting wages had been moving higher. Today's print is indicative of a tight labor market. Yields jumped after the numbers were released, and stocks were mixed on expectations that data justified more rate hikes from the Federal Reserve. The news wasn't all good on the employment front. Counts for the 2 previous months were lowered by 50,000, from 248,000 to 208,000 in June, and from 157,000 to 147,000 in July. In the big picture, though, the August numbers was in line with the average monthly gains of 196,000 over the past 12 months. In addition, there was a surge in those counted as not in the labor force. The number rose by 692,000 to 96.3 million. Wow. A broader measure of unemployment that takes into account discouraged workers and those at jobs part time for economic reasons edged lower from 7.5% to 7.4%. The report overall serves as a capstone to one of the greatest labor market recovery periods of all time, with the economy creating new jobs in an impressive manner and wage rates finally rising nicely. Rick Ryder, BlackRock's chief investment officer of global fixed income, said in a note, The biggest contributor to job gains was professional and business services, which added 53,000. Healthcare grew by 33,000. Wholesale trade rose by 22,000, and transportation and warehousing contributed 20,000 to the total. There also were 6,000 new mining jobs in the profession that has added 104,000 positions since October 2016, primarily in support activities. Construction also grew by 23,000, though manufacturing lost 3,000 positions. Fed eyeing wages. Average hourly earnings increased 10 cents for the month to $27.16. The metric is closely watched as an inflation gauge at a time when the Federal Reserve has been raising interest rates in part to guard against runaway cost pressures. Market participants widely expect the Fed to hike its benchmark rate another quarter point in September and likely add one more increase in December. Friday's wage report likely will only encourage the central bank in its quest to normalize policy after years of accommodation during and after the financial crisis. There were other pockets of weakness, though, in the report. The labor force participation rate and employment to population rate both declined 0.2 percent points to 62.7% and 60.3%, respectively. According to the household survey, the ranks of the employed slumped by 423,000 to 155.5 million. At the same time, the roles of those at work part time for economic reasons or the underemployed fell by 188,000 to 4.4 million. That number has declined by 830,000 over the past year. The big moves, though, could have been caused by seasonal distortions that are common in August. All right, now I think Jack, you requested this to be on an article tonight.
on the docket.
That's
Oh,
Preem.
yeah, on the docket. Say again.
That's Preem.
Okay, well, it's Preem. All right. I think he's here. But any comments on this one?
Well, I'll say this about it. You know, the market isn't really. There's nothing to really drive the market right now in terms of spending, right? So people don't have jobs, so there's no reason to actually put, there's no reason for anybody to spend any money. So therefore, there's no demand anymore. People people are basically kind of tapped out on their funds. I mean, we see a lot of people driving around in these fancy cars, and we know that the repossession rate is happening in 30 to 45 days. So there's not a whole lot of money going around at the bottom end where most of your revenue is going to come from.
How you doing, anti-gravity? How you doing today?
I'm good, guys. What's new? What's up?
All right, doing good here.
What's up, Jack and Ghana Dan too?
What's up, Chief? Well, the time on that it says a lot of job growth, but I just read a recent article regarding foreclosures right now, and in certain it's been in certain states it's been like within 20 to it varied from 9% to 35% in certain states. And so for the third
Wait,
consecutive month,
35?
yeah, in South Florida has been 35% that they put it.
Jesus.
Yeah, so there's something that they haven't really been talking about too much. So I'm like, all right, so if there's so much job growth, what's with all the and this is the third consecutive month that has been consistently growing with the foreclosures. That doesn't really connect. So I know at the end of the article it says here that um I'm not sure, it says the big moves could have been caused by seasonal distortion that's common in August. So I'm not sure if you're talking about wait to the end of the year, but yeah, it is not correlating from what I'm seeing right now. Um, what's your
So
thought?
do you think that the mortgage-backed securities are back? Is that why, or what do you think? is causing this?
Well,
Interest rates are up on mortgages, though.
yeah, they're up right now. I know that I read another recent article from Fannie. I'm sorry, can't pronounce the word right. Fannie Mac. As far as the government still holding on to, I guess the whole bailout plan they had, and they made over the past 10 years, $80 billion return on their investment when they took over that. So, they're making money. Money's being made, but I think right now they're stating that from where I read that article that um wages are not going up in certain areas, and the prices of homes are going up. And a lot of people are putting out second mortgages on their home and taking money out on their equity, taking the equity out. So this seeing that the income is not rising high enough, they can't afford to uh, pay back what they took out. So that's why I said a lot of these mortgages are going out. These mortgages are filling out right now. So um, you think it's like this is more of a correction, or what's your thoughts?
I think there's a lot of things going on at the kind of at the same time. Well, one is the interest rates. That's basically like the backdrop. And then, as for these job reports, job growth is up. It's just the problem is that there's a few things. One, there's a skills, gap. So there's a lot of jobs open, right now that need to be filled. The employers are begging for employees to fill it, but people just don't have the skills, right? And so there's a huge skills gap. So there are a lot of people who are also underemployed. So that means, they would prefer to be working full time, but they can't find any full time work, so they're working part time, right?
Or
Oh, go ahead, Mike.
no, I was just gonna say, yeah, if they can't get 40 hours, they'll step 32.
Right.
And there's other speculation why a lot of people can't get 40 hours.
So what's the speculation?
Because of Obamacare and the high price
Oh,
of
right.
like a lot of businesses are cheating people of hours, so they have to sit on, so they don't have to pay them pay the medical.
So they're not so they're not a full time worker kind of thing.
Right. So they'll cheat them on the hours. So now people have to get second jobs to uh to get the extra hours. And now it seems like more people are getting more jobs, but in actuality, these other nefarious things are going on.
Yeah, and all of that's fueling the gig economy. So as we, just coming off of Labor Day, somebody put a union card in front of you to sign. Think about it. Think real hard about it. Create more workers for people to have families. That's one of the big issues with the union.
See, in places like Chicago, the black male unemployment rate is something like 65%.
Man, you want me to be cursed? That is high. It is really high. It's not a joke. I'm trying to hold back, the laughter, but the laughter is from. It's so sad. It's funny. It's yeah.
In Baltimore, they said it's 45%. So two out of every three black men that you see either Chicago or Baltimore do not have a job or they're not employable.
Right. Because there's a lot of also, criminal records, those kind of things play a factor in unemployability. I think felons have something like 90% unemployment rate. So how much do you think that's the factor? I know that there aren't. Was it?
Would you say 90% of what?
90% of felons are unemployed.
And see, what they don't tell you is that when these guys are in jail, they're working for IBM and the rest of these companies, manufacturing boards and doing recycling and redemption of printed circuit boards and silicon hardware and things like that. They don't tell you that those guys are actually working for free. There's slavery going on
slave labor.
Right. Right. That stuff is going on right now as we speak. You know, guys making leggings for women, and all these women running around with these leggings on, and you know, and this it's a messy situation because numbers are not being reported correctly in the way that it should to make to give context to why this is happening. You know, the dollar is strong right now, but yet there's high unemployment rate in most black and brown areas. We know why there's high unemployment rates in white areas, especially amongst white men, because the blue collar jobs that were once there, that were promised to be brought back from Mexico and China, are not there. You know, Trump gave out, I think, $60 million in tax relief for Carrier air conditioners to remain in the Midwest, and now to hold 2,000 jobs. And now we're finding out in the next 6 months those jobs are going to be gone.
That's
Right.
And yeah, it makes you wonder if this is planned. You know, it's not. You tell me I know about a skills gap. You know, American corporations have gotten lazy. You know, you go back 30 years ago, 20, 30 years ago, corporations accepted that it was part of their responsibility to train people on the job. People have gotten so lazy, corporations have gotten so lazy, and meanwhile we've created all these expensive educational options. We've made a huge industry out of education to create this debt that's strangling people. And I think it's going to take some initiative from at the federal level to offer some kind of tax incentive, a credit to make corporations go back to training people on the job.
Right. Or instead of giving,
the way that it works now, with the people going to school and spending all this money for education, that's not how America was created. That's a recent thing.
Mm-hmm.
I used to work for Dell, and they don't pay for your master's degree anymore. So now, you know, they go out and go get an H-1B visa and have them come in with their master's degree, and then you're displaced now. So that's the name of the game that they're playing now. So to what Dollar was saying, there is some validity.
Yeah, and I just resent when these like skill gap questions, when the topic comes up, it's always kind of a subtle implication that Americans are lazy and stupid. No. No,
No, that's not what I was trying to say. I'm just saying it.
I'm not saying you said that. I'm saying
Okay.
just in general in the country when this debate comes up, the sentiment is we need to be more motivated somehow and all. No, corporations have to get on the side of the worker, and
right.
Yeah.
Or at the very least, instead of giving, like for example, Wisconsin gave basically a $4 billion cash to Foxconn, right, to build, I think it's car glass, the front end of the car, that glass area. But instead of giving windshield, yeah. So instead of giving those $4 billion to that, company, they could have invested it in, training or workforce education or something to that effect, because the unemployment rate in Wisconsin is like 2.1%. Like it's a super acute, right? A lot of the other places, they say that the companies, they're really looking for workers, but in Wisconsin it's even more extreme.
You
but
give
they
articles.
Oh, is that one of the articles that coming?
Yeah.
Okay. I'll wait then. So yeah, they should instead of giving. Oh, go ahead.
No, I was just going to say part of this reason for education, lack of education, is because we told all these millennials to go to school, get yourself a degree, and then next thing you know, they got themselves a degree and then got themselves into a lot of debt. So now there's some resentment for that, and no one's there to actually hire them for a job to pay off this debt. So now you have a lot of people who are upside down in their life, not just financially, but just in their life. They're just upside down. They don't have the skill set. They went to school, got a degree in psychology. It's not applicable anywhere in this new fourth industrial revolution. And these companies are saying, well, we can't hire anybody because we can't find the proper resources. Well, that's because we didn't actually step our community colleges up and provide aid to them. Because under Obama, and I think under Bush, they had cut funding to community colleges. So now those community colleges are just stagnant in their preparation for new skill sets. So they're not getting the funding from the federal government like they should, even though our tax dollars are actually paying for it. The money's not going there; it's going somewhere else.
If I were king of America, forget president, I want to be king. If I was king of America for a day, I would put one rule in, and that rule would be no one is allowed to enroll in any training program or university without visiting, signing a certification, signing a letter, a statement saying that they visited the BLS.gov, Bureau of Labor Statistics.gov, this federal government site, and they explain the forecast for every industry. So you can see the viability of your college degree right there on the federal government page. It's always been there. So I think if people were forced to know the economic projections of the field that they were studying to enter, I think it would make people choose a different field. They would choose differently.
Dollar World, the only thing that really matters at this point is digital literacy. I talk about this a lot. Not just being able to get on Instagram and look at chick pics and stuff like that. The ability to write code, cybersecurity, risk and compliance, what do you call it? Computer engineering, electrical engineering. Hard sciences matter at this point. If you're not practicing any of these 10 hard sciences that I've mentioned, you are going to be SOL. You would not get a job that will lead to middle class or upper class lifestyle. There will be no class transitioning for you.
It's crazy you say that. I was listening to a video article, and they're discussing using robotics in China, right?
That's another that's another article.
Oh, it's on there too. My bad. All
Yes.
right.
Let's go ahead and
we're moving.
Yeah, continue the get the show going. This next article comes from YouTube. Get to it. Name of the YouTube video. Excuse me. It comes from TRT World. Name of the YouTube video is "Machines Replace People in Shifting Job Market," and this actually was the next article. With this article, it's saying that in China, China has a population of over 1 billion people, but with the onset of automation and blockchain and all the other technologies that we discuss on this channel, the pertinent upcoming technologies with automation, they're replacing people in jobs, in repetitive jobs. The guy in the beginning of the video, I forgot what they said they were making in his workplace, said that they had 65 hands of people, 65 different people putting components into what they're building, but now they only have a handful of people working there, and the automated robots replace the majority of the people. Mike, what else would you like to say about this?
They also have a millennial issue. So your millennials and your Generation Zs, I believe that's what they're called, don't want to work in the factories anymore. They don't see that as appealing. So now they have a labor shortage of actual hands that they would have had 10 and 15 years ago. Those same people going into college or of college enrollment age don't want to work in these factories. So your labor shortage is coming from a perception of quality of life. They don't see long hours inside of they don't see the blue collar as being a desirable area to be in. They want to be inside the white collar area. So what they're doing is they're getting into more computer development, computer technology, information technology. That's what they're looking to get their way into because they want a nice cushy job. So they've for the most part, these Chinese millennials have become Americanized. So they want to sit on their butt and kind of collect, rake in the dough as well in these vertical markets. The problem is they're they're not as developed in that area as we are. We have we have a lot more companies in the United States than China does. So most of your work is going to be state run companies. But in America, we have 1,001 private institutions that will do all the hiring, including contracting. And in China, it's not so much as like that. So their labor shortage is going to kill them in the next few years if they don't have enough people to put things together for them. I foresee some of the stuff coming out of Africa is that either they're going to shift the manufacturing to Africa, where there's a high concentration of excess labor willing to do the work, or they'll have to import people from other places to come work inside these factories.
Any other points?
Yeah, it's very shocking how the Chinese have become similar to the. Well, actually, it's the more Westernization. I don't know if it's exactly similar to the U.S. per se, but what Mike is saying, I definitely agree with. But I think they screwed themselves with the one-child policy. So now they're going to end up kind of like Korea and Japan, where the elderly are, the population pyramid, the elderly is the largest, and then children are much less. Because they removed, I think 2 years ago, they removed the one-child policy to a two-child policy, and then now they're thinking about removing any child policy at all, so you can have as many kids as you want. But what happened was when they took away the one-child policy and allowed you to have two children, no one wanted to have two children because it's expensive, according to them. So that's what I kind of see happening. So that'll definitely be a huge problem for them, in the next 30 years, 30, 40 years.
Or we could see this as a victory for Africa, because Africa has enough. I think 2/3 of Africa's
it's under 35.
It's under 35. So you have a lot of millennials and Generation Zs that could make up in the backfill of manufacturing and of goods. If I was in charge of the Ministry of Economics over in any one of those African countries, I would be looking at building factories in Africa. So
yeah, absolutely.
Any other points?
Yeah, what was surprising about that article was it said that they're trying to cut labor costs by 40%. Plus, since they put the robots in there, they produce more with less people in that warehouse than when they had more employees. So that was surprising, that how efficient these robots and automation is right now. That's surprising. So it's something I see. What do you think the likelihood of that's happening here? Like, how fast do you think they can do a push for that here? Or is that already happening?
It probably won't happen because of the unions. It probably won't happen as quickly because of the unions. The unions will fight against robots taking their jobs.
Mm.
I mean, Dollar Will's an old union guy, so he probably knows more about that.
Yeah, they will put up a fight, but I tell you, when the place that I work, they can't, unions, they can't deny reality. My company downsized, and I was on the committee. One of the things I had to do was get the company to admit that there was a downsize plan in the future. We got ahead of it. We didn't wait for the downsize to happen. We initiated the discussion about it because it was obvious that it was going to happen. So we got ahead of it and negotiated the terms of it, and put in policies for voluntary buyouts. And we had no layoffs. Everybody, the people, they had enough voluntary layoffs over a span of, say, 3 or 4 years that the company got down to the number they wanted, without anybody being involuntarily laid off.
Mm-hmm.
So it can happen. So we also negotiated in their educational stipends, okay, and up to, in some cases, up to 18 months health care. So unions can be progressive too. That's all I want to say.
Any other points on this one?
Yeah, I want to say on that article, people it relates to the comment I was making about the Bureau of Labor Standards. People have a idea of what this white collar, blue collar thing. There's the status, and then there's the income, and there's a disconnect. People want high status. What they think is high status turns out to be low income. and and I think that if we force people to go to the information that's on the Bureau of Labor Standards BLS.gov, they will get a rude awakening to what status is, what where the money is. You know, I tell you, I got a rude awakening myself when I bought my house and I had to call a plumber. It changed my understanding of where the money is, you know.
What do
because
you mean?
because the plumber's hourly rate was more money than what I was making on my job. Okay. And when I went and I got another slap in the face when I took my car to a mechanic, and the hourly rate that the mechanic was charging was more money than I was making on my job per hour. And I thought I had some status. Okay. They were making more money than me. Okay.
Sure.
So
Yeah.
we got it. We
Mechanics.
just, go ahead.
No, I was just gonna say mechanics are about $90 an hour.
Exactly. So people, there's a disconnect in people's minds between uh, that they're wrong. They're mistaken. What they think is high status is not. Wearing a suit and going to work in an office and making $40,000, and you walking around thinking that you are higher in status than someone wearing a uniform that's making $90 an hour. It's just crazy. So yeah. We got to send people to the data at bls.gov so they can, you know, figure out, do you want status, or what your myth of status, or do you want real money?
That's deep.
All right. Any other points?
You know what? Real quick, I don't know if it's me. I know somebody, right, who was a blue collar guy, went to school, got his master's. He works for a Fortune 500 company, and he's like, I hate my job, man. You know what I'm saying? And it's like, and I guess there's a pressure of it. He's not really happy doing what he does. So I'm like, okay, I'm looking at that now, and I'm noticing like, um, the rates as far as depression and certain things like that. Um, I think how they sell it to be is not what people think it was once they get in there. From my perception of it, that's all I had to
Right.
say.
You
Yeah.
have no control. You have no control. You look at a guy like Man of Tomorrow. He's running a trucking business. He's got control. He can be as big or as small as he wants. If he wants to make more money, he just grows his business. And you don't have that kind of control over your life going being a desk jockey, in corporate America. You don't have that kind of control.
I also think that it has a lot to do with uncertainty, right? So you can be laid off or involuntary separation, things of that nature makes it unwary for a person being in that environment, especially when you're a black man. Um, you always, I think they call it, last to be hired, first to be fired. I think that's what they call it. So there's a lot of uncertainty for black men in these areas, and then you tack on, racism and sexism against black men, because black men go through sexism too, and I think that's important. For us to talk about in terms of how we interact in corporate America. There's a lot of white male fragility that happens in the corporate office that can't handle a black man that either knows more than him or looks better than him or speaks better than him. Things of that nature really makes working in corporate America can be a real drag.
Mm.
All right. We're gonna go to the next article because it segues into what we are already speaking about. And this next article is another YouTube video. YouTube channel is the PBS NewsHour. The title of the video is how Wisconsin is trying to head off a major worker shortage. Now, Jack, you wanted this article to be on the docket for tonight, and I know anti-gravity. You live in, well, I don't mean to put your business out there, but you're from the area, um, and per
Right.
what you all were just speaking about already within these last two articles, I believe this can perfectly segue into what the conversation has organically gone to now. But in the video, they're saying that there are more jobs than people to hire, and that industries can't even hire people because there's no one there to hire. I'll open it up, or I'll not this. I won't open the mic up to this, but I'll for this docket, I'll open it up. Anyone?
You want to go first, Jack?
Yeah. I want to
Or
ask.
should
I
I go?
want to just kind of related to you. How willing do you think brothers are willing, or do you think we're willing to go to some of these places where there are jobs?
That's interesting because they're in an article they're saying that they were making commercials, for the state to entice people from Chicago to move out there, and they're saying that instead of them pushing, this type of jobs are there, they're pushing more lifestyle. And honestly, I ain't from. I don't. When I think Wisconsin, I think I don't know. I'm not from there, but when I think Wisconsin, from being from South Florida, I think like it's like
Snow.
farmland. There's nothing out there. So, um, but I
Dude, I
guess
think those cold Green Bay Packer football games.
yeah,
I'm like, oh no.
yeah, I'm good. But it was just very interesting because what I got out of that was I just never saw something like that where, they're lowering the standards for hiring people, and I know in that state they have a opiate problem too, and even the owner of that business, that machinist business, was like kind of embarrassed to say like, yeah, I'm waiving my drug testing policy, and I'm like, that's a machining shop, and it's like, you gotta kind of be aware, you know, what type of drugs this guy. You don't want people going to work high over there, so it's like, um, it's very interesting, man. But what's your thoughts on the anti gravity? What do you think?
Hey, intern, before you say so, I want to input something. I don't know why I
Sure.
saw this at, but someone was saying that I'm gonna paraphrase here, that black people are less likely to move north and are more likely to move south. So when you have jobs such as the in South Dakota with the oil that was going on there, you had less black people there because they are less likely to move in the colder areas than other people.
I
I
believe
just want
that.
to throw that in there while you want to discuss this.
Yeah, we might want to rethink that, go get that money, and
Right.
save up
It's
some
not
money
even that cold.
if you want to come. Well, you're used to it.
So, go ahead,
So
Gravity. What's your
it's
thoughts,
not
brother?
that so it's not that cold, man.
Well, most people, it's not like people are, I don't think even people are really outside, well, that much, right? Usually, they get out of their house, they go to their, car that's heated up, they go to the store that's heated, they go back to their house that's heated, they go to their job that's heated. That's it. There's like 10, 15 minutes a day
Mm.
that you have to spend
But
outside. So,
you also have the buildings that are interconnected.
oh yeah, yeah, in downtown. Yeah, we have that here in
Right.
Minnesota, or Minneapolis, I should say. Yeah.
Hmm.
Yeah.
I know that.
Yeah, the buildings are interconnected so they can avoid the cold.
Right. That's true.
Well, I guess the information people would need about going to Wisconsin or these other places, and oil shale markets and all that, is housing affordable? We see jobs, but can you make a living?
That's
You
true.
know, So I think that's the
In
other
the
piece they need to sell what's
right.
the quality of life you're gonna have at that wage in that city. And then you might get people
It's much cheaper than the West Coast and the East Coast. Maybe not the South, but you know.
Hmm.
But
So the
yeah,
cost of living is really low, pretty much. So
yeah, I
pretty
think
much.
it's closer to Texas in terms of cost of living.
Hmm.
I mean,
Right.
just think about if you're in a field and you need to get some experience, hey man, go out there in the middle of nowhere, save some money, pad your resume, get some promotions and get some skills. Maybe even go to community college there, or maybe the job is paying for some of the education. You'll go there, and if you want to come back, you're coming back with a better resume, or maybe you're coming back only if you get a job.
Hmm.
You know, so
I see
yeah,
what you're saying.
that's
Go
something.
there, get some experience, then come back.
Right, right. Or in fact, you apply for the job on the east while you're still out there in the middle of nowhere. If you get the job, or then you come back. you know, we might have to be more flexible. Than we can.
Any other comments on them?
Another
No,
thing
sorry.
too, kind of interesting about that was Foxcom. They're paying them $3 billion this cash just to start just to build out there and have their company out there. And I guess
I think that's tax relief.
But
it was tax credit, I think, but they don't. That state gives
they don't
cash.
have a business. Yeah, they don't have was it a state tax or business tax for corporations or something to that effect? Do
Hmm.
you remember what the video said, Jack?
I think it was. I think it was. They give a tax credit. They don't have a. They don't do business tax there. They're not doing a business tax, so they give them cash. So I guess. So I guess the taxes on the employees are higher. They tax the employees. Is that how it works?
I'm not sure. I'll have to look into that.
Okay.
I think if you hire a certain amount of employees, then it becomes tax deductible as well. So I mean, I don't know the stipulations behind it, but that's typically how it works in these kind of deals. I know here in Massachusetts, Fidelity decided that they were going to shift their jobs from Massachusetts down to Raleigh and Westlake,
Hmm.
Texas. 1,000 jobs disappeared overnight, and
Mm.
that got the governor and the mayors and everybody into a emergency conference to decide what else can they do to relieve the burden of 1,000 upper middle class jobs is disappearing overnight.
Damn. Hmm.
Hmm. All right.
That's all your tax revenue going out the door.
So is that going to be what Trump is kind of pushing for to get? When he's like, we're trying to bring jobs back to America. Is that what he's trying to push for? Something like that? You know, kind of giving these companies free money just to build your own facility and kind of pocket some of the cash and still move your business here. Is that what he's pushing for or been pushing for?
Yeah, yeah, that's typically what he wants. But the thing is, who are you going to hire, right? Who's really working these jobs? Because I don't foresee, um, uh, uh, um, for example, the new NAFTA agreement renegotiates his contracts with I think with Mexico,
Yeah.
um, to reduce their wages down to $2.50 an hour. If you're a corporation that's in the business of manufacturing, and you're paying your employees in Detroit or Indiana 25-30 bucks an hour, how can you compete against $2.50 an hour?
Okay.
Mm. That's crazy. That's crazy.
All
That's
right.
that's that's crazy. Yeah.
All right. Let's go ahead and get to our next article here. Our next article comes from yahoo.com. Title: August Exit from Gold ETFs. All right. Article: Gold notched its fifth consecutive monthly loss in August, prompting investors to depart gold exchange traded funds, such as the Spider Gold shares, which is a trading symbol of GLD. GLD is the world's largest ETF backed by physical holdings of gold. The stretching, the strengthening U.S. economy is translating to a stronger dollar, which is often a problem for gold. Gold, like other commodities, is denominated in dollars, meaning it has an inverse relationship to the U.S. economy. I'd like to read that again for people that are listening to this, because this is what we've been talking about. One of the things we've been talking about all night. All right, the strengthening U.S. economy is translating to a stronger dollar, which is often a problem for gold. Gold, like other commodities, is denominated in dollars, meaning it has an inverse relationship to the U.S. economy, to the U.S. currency. August was the third consecutive month of declines for holdings at global gold ETFs. Holdings of gold by global exchange traded funds and similar products fell by 40 tons during August. The World Gold Council reported Thursday, according to Kitco News. Holdings now stand at 2,353 tons after 3 straight months of declines. The drop was also coupled with softer gold prices, and assets under management fell by 3%. For the year to date, ETF holdings are now down by 18.5 tons. Investors have been shunning physical assets like gold in face of further interest rate tightening out of the Federal Reserve amid a robust U.S. economy. Fed Chairman Jerome Powell said earlier in August that gradual rate hikes will come, and with inflation still slow, there was little concern over the economy overheating. Rough month for gold. Gold ETFs based in North America posted outflows of 44 tons. Those in Europe grew by 4 tons, while Asian ETFs added 2 tons. Other regions posted a reduction of 2 tons, report Kitco. Gold currently resides 7% below its 200-day moving average and more than 12% below its 52-week high. The benchmark gold ETF is lower by more than 8% year to date. Funds listed in China saw net gains as investors headed trades. Funds listed in China saw net gains as investors hedged trade risk and currency weakness. The WGC said in its report, notes Kitco. Flows in Europe were mostly flat. Global outflows were led by North American funds, driven by a combination of momentum, as the US dollar gold price fell by more than 2% for the month, and a risk on appetite by US investors in the face of an expanding economy. For the week ended September 5th, investors pulled 550 cent. Excuse me, I read that completely wrong. For the week ended September 5th, investors pulled 500 million from gold. Year to date, the gold fund has seen outflows of 3.46 billion. All right, Dollar, well, I feel you have a good insight on what I just read. Any comments on this one?
I say go ahead and read the next one, and we can just talk about them both together because it's the same thing. Read the next article.
All right, our next article. Let me share my screen again, people. Our next article comes from Yahoo Finance again, titled Silver ETF Suffering from Double Whammy. Article: Silver and related silver ETFs have weakened along with gold this year, but this precious metal has suffered a particularly heavy blow. Year to date, the iShares Silver Trust, with a trading symbol of SLV, has declined 16.5%, and ETFS Physical Silver Shares, trading symbol SIVR, has declined 16.5%, falling off about 8% in the month of August alone. And they are both trading at their lowest levels since the start of 2016. COMEX silver futures are now hovering above 12.2 per 12 excuse me $14.20 per ounce. Silver has been outperforming in the precious metal space. In comparison, the Spider Gold shares, trading symbol GLD, the largest gold related ETF, only dropped 8.4% so far this year, with COMEX gold futures trading around $1,205 per ounce. Potential weakness in global manufacturing has been a particular worrying development for the silver market. While silver is classified as a precious metal, it is still used in a range of industrial applications from electronics to jet engine manufacturing, which makes the metal sensitive to global economic trends, the Wall Street Journal reported. Silver market industrial demand outlook. The global economic picture has come into question as an intensifying trade war between the US and China, along with problems in the broader emerging markets, weighed on the silver market and the industrial demand outlook. Further dragging on silver prices, a strengthening US dollar has made it more expensive for foreign buyers. The US dollar index, which tracks the US dollar moves against a basket of foreign currencies, has increased 4.5% so far this year. Precious metals have traditionally exhibited an inverse relationship to the greenback or the US dollar. Traders often steer towards safe haven bets like silver during times of market volatility. But the recent rise in the US dollar has discouraged many from buying the physical asset during the most recent bouts of market swings. Silver prices are getting hit from two sides. George Jarrow, managing director of RBC Capital Markets, told the Wall Street Journal. Buyers and bargain hunters are looking for lower prices to re enter the market, but not at these levels. Looking ahead, silver and other precious metals may continue to face an uphill struggle as the Federal Reserve is expected to keep hiking interest rates, which makes non yielding assets like commodities less attractive. And I want to read one paragraph in this article one more time to sink it in for people. Potential weakness in the global markets, potential weakness in global manufacturing has been a particular worrying development for the silver market. While silver is classified as a precious metal, it is still used in a range of industrial applications from electronics to jet engine manufacturing. It makes the metal sensitive to global economic trends, the Wall Street Journal reported. The reason I read that is because, Will, as you explained, I'm pretty sure you're getting that also, and I just want people to hear that part last so they can get a better understanding of what you're about to say. And with the conclusion of that article, I'm going to open up the microphone for open mic. You could go ahead and take it, Dollar Will.
Yeah, I'm just gonna beat that horse into the ground, kick that dog until everybody gets that point that the dollar versus energy and metals, that's the most important trade on planet Earth. That's running the world. So if you can keep your eye on that, you'll be trading in the correct uh, direction. And again, when we say metals, that includes steel and aluminum. So now, when you understand what about the tariffs with Trump, because the price of these metals is going down, and you had China trying to send their excess metals here, and so every country with excess of these metals is trying to find some place to dump it. And of course, America's position is don't send it here, because the country that has the greatest inventory of this commodity that nobody wants right now, it's going to make it hard. One, you got to pay storage on the thing. Let's just start right there. You don't want to store a product that's not selling. So you're paying a fee every month to warehouse this stuff that you can't sell, or as you sell it, you're selling it for a lower price. So it's like the cutout bin in the store. When you go to the store, they got the cutout bin. It's the cutout bin that won't go away. So that's the only reason why I put it up, just to keep nailing that relationship home to everybody. Oh, and the hell in those metals, those that's the same hell, the same force that's working against cryptocurrencies or Bitcoin right now. Again, just to restate that point. That's all.
So you think it's best to just keep, as far as gold, to short it right now? You think it's best to
Oh
short?
yeah, oh yeah, it's a short. It's a short right now. And the thing is, everybody knows it. You know, that's why when it falls fast because you got the whole world trading against it.
Hmm. Do me a favor, man. Can you pull it up on your screen on the chart and just do a quick like chart read on it real quick?
Okay. Go ahead. Y'all talk about something else while I get it together.
All right.
Okay. Yeah, the reason I want to read the article was because for the people that are listening to the show, the more and more you listen to it, you will understand what things that click when in these articles we read. When the article said that silver is sensitive to the market, and I remember Dollar Will constantly saying that silver is used in industrial measures and in industrial settings. Silver is actually used. It's just not a metal just sit there, just more like gold is. No, I understand gold can be used for things, but gold tends to just sit there. But also in the last two articles, it did say the gold and the metal, which are metal, gold and the silver, which are metals, has an adverse relationship to the U.S. economy because they are denominated in U.S. dollars, which means when you want to buy shares in gold, silver, whatever metal, you have to have U.S. dollars to buy it, particularly in this economy. Which means so when there's a stronger dollar, which means the dollar the purchasing power of the dollar is high. The adverse relationship is with the metals in this picture they are weak. They're the how much they cost to buy each share is low. The price drops. But on the other hand, when the purchasing power of the dollar is low, then those metals that we just said are weak, they become strong. So the picture I wanted to paint earlier was that's what a lot of people that's what people with money do. They go from one thing to another and they know how the markets operate. Things like this, as you hear us more and more, things like this got dollars to metals, oil, the euro. We know if the dollar is high, gold is low. And when that dynamic changes, gold is high, dollar is low. So they know when that comes, then all right, let me shift my money to over here. That was the picture I was trying to get at. The more you hear it, the more you know about it, the easier it becomes to understand. You ready, Dollar Will?
Yeah, yeah. We're looking at a quarterly chart of the ETF GLD that he was talking about, and I like looking at longer time frames. One, it just takes out the unnecessary movement. Each candlestick here is three represents 3 months, and you can see, you don't doesn't take no PhD to see that this bottom here, uh, this is a bottom corresponds with this low right here. And I'm an Elliott wave theory trader, and in Elliott wave theory, downturns or reach let's see, contractions are like go follow ABC pattern, and I'm calling this A B, and I believe we're going to see a C pattern and come down even further. And on the stochastic right here, we go from over bought to oversold. I'm saying that move represents the A. This represents B, and this black line is the fast line. It's already crossed below the slower line. So this is proof in this graph that we are going down, and I believe we have much further to go. And we have to get to this oversold area. And the oversold area is anything below 20. Okay, so we're all the way up here at 63 right now. We got a long way to go. Okay, so Gold is going to get weaker. Dollar is going to get stronger. Let me see what we got here for the dollar. Let's see. No, I don't want to do that. I'm trying to figure out what symbol I want to use. I'll use. I always use dollar Swiss franc. It's just because I watch it so much. So remember this high here is 2011, and that should correspond with the low on this chart. I'm getting ready to show you a dollar rise since 2011. Let's see. Quarterly. This is a great site, barchart.com. It's just slow. It's really slow when I'm doing Hangouts, but also I got a lot of crap on it, which is slowing it down even more.
You gotta close some cowboy tabs.
Ah, yeah, this is a big weekend. Let's see. What do we got here? Dollar. Trying to. Wow, okay. All right. It's good that it opened up this far. This chart, my eyes are bad. It's like from 85, showing you that the general direction of the dollar. In fact, if I had the data to go back to 1970, you would see it just falling off a cliff. That's the normal. I know it's counterintuitive, but the normal trend for the dollar to move is down. Okay, and so the normal trend in when the dollar is to move down, and so that means the normal trend in things like oil and gold and copper and silver is to move higher. That's also why in America we generally say, well, you know, it's good to buy a house. Well, why is it good to buy the house? Because the normal trend of the dollar is to go down. That creates strength in those metals and those materials. And what is a house? A house is materials. Everything from concrete, you got copper in the wire for the electricity. You have metals in your refrigerator, washing machine. You got wood and lumber in the furniture. A house is just full of dollar sensitive commodities, full of it. And so I just can't make it any clearer than just you know this picture here. But it doesn't always go down. So you got you have these periods where it rises. This is from 95 to 2000. We had a run. And so from 2000 to 2011, that's like 11 years. It dropped. So we're in an uptrend right now, and I think we got a good bit to go higher on the dollar before it resumes its normal downtrend. And when the dollar maybe completes its retrace, that's when people are going to get excited about cryptocurrencies and gold and oil, all of it. But right now, this the dollar rise is not over. It's not over. So
Quick question with the house with the house thing. So when people have all of these like the marble, the wood flooring, the slate flooring, all of this high-end material in their house, and people fall on hard times. Let's say if a person falls on hard times, they got marble counters, granite stove counter, things like that. They can actually sell those materials.
I'll go even further. As you people, some people unfortunately might have personal experience with this. If you leave your house sitting, people will come into your house and gut your house of those materials and go sell them.
They call them scavengers.
Yeah, scavengers. They'll take the copper pipes out your walls.
Like the tub and everything, if the tub is made of a certain material.
Well, your tub is cast iron, mostly.
No, but
Right.
like your AC could your AC
Yeah, yep, yeah. Your
that's like
AC, your
at
coil, your copper coil for that. Exactly. Now the thing about it is as the dollar generally declines, those metals go up in price and the home builders pass that price on to the seller, the buyer, let's say the new home builders. And you have to pay for that increase in material cost. That's why the home price goes up. So that's why your house appreciates. So in the United States, what we do
Wait,
is we
hold on. I mean to cut you off.
Mhm.
Can you say that one more time, please?
As the dollar declines, those metals go up in cost. The actual cost of gold and all those metals, including aluminum and steel, those prices go higher. And the home builder, the new home builder, they calculate those increased costs into the price of the home, and you pay those that increased price, and that's why houses generally appreciate. That's why in America we say it's good to buy a house, because generally speaking, it is. It is true, but there are exceptions to that rule, and these periods like here, and in the period we're in right now, there are exceptions to the rule. But generally speaking, the dollar goes down, metals go higher, your house goes up in value. And that's the trade you make. You get your paycheck and you trade your US dollars in your paycheck for a bundle of materials that you call a house. But the house really is a collection of commodities. So you're in a commodity trade when you buy your house.
That's an amazing observation. Now, when the economy goes
Oh, and then
bust,
the bank jumps on board, of course, and you get an interest. They charge interest on the whole deal, but at the focus of it is that trade of dollars for commodities. When you go and you buy those shoes or those clothes, that cotton and those material, you are trading dollars for commodities. You're in that trade all of your life in capitalism. That's what you are doing.
Now,
question.
what if you live in the projects?
Um,
Then you buying what people buy in the project. I mean, hey man, there's some nice cars riding around in the project, but unfortunately, we don't, that doesn't appreciate. But it does affect the car manufacturers, because that's why the price of the automobiles don't cost what they did when you were 16 years old, because the price of those metals has gone up as the dollar has declined. That's why automobiles just keep getting more and more expensive.
okay, so when the market goes bust, the economy goes bust, and the housing prices go down, that's just because the economy, no one is buying housing prices, so prices are just going to generally go down.
It can at some point the supply is greater than the demand at some point. And everything has to correct at some point, and that's what's going on with gold. Gold, I showed the decline since 2011, but prior to that, let's see, gold went sideways from like 1980 to like 1999. So gold went sideways, didn't do squat for about 20 years. And then in 1999, gold took off, and it ran from 1999 up to 2011. And so all we're doing right now is having a retrace from this historic breakout of gold. That's all. That covers about 30 years of gold right there. And when this little decline is over, it's going to continue going higher, and so will oil.
Hmm.
And so will oil.
But that
So,
was amazing observation what you just said. I did not think of that.
hey, I'm Dollar Will. That's why I focus right there on the dollar. I mean, I didn't start out It just this understanding came to me over time, and when I got it, I was upset because I was like, this is too simple. Why didn't somebody teach me this in school? I could have learned this in high school or junior high. It's not that complicated, you know.
Right now.
So I felt kind of set up, you know. It's like, you know, if you with this little bit of information, you can kind of get a sense of when you should buy your house. You know, if you know that the commodity prices are falling and they are about to start rising, you know those rising commodity costs are going to be passed on to you as the home purchaser. So if you can time the bottom, then that'll be the time to get a house.
Mm.
You know, somebody's got to pay the freight, and it's always you. It's
That's the
always
thing.
the costs always get passed to us. Is there anything else, Jack? Is that what you wanted to see on the chart? Was there something more specific you wanted to see?
Nah, man, you just gave me some supreme knowledge right there, man. That was good.
Yeah.
I
And
never thought of
and
that.
Jack is a realtor, right?
Yeah,
Yeah,
never thought. I never seen it like that before. I never like really looked at it like that. But
yeah. You just gave him miles of insight.
yeah,
And
so I'm gonna start
you know
researching
what
the
happens.
prices and try to. What I'm gonna do is go back on charts and research the prices and correlate it and see how that worked. I gotta look that up.
Yeah, that's the best way to do it. And what you also should do is throw up there on those charts your mortgage brokers too,
Mm,
because you're going to see something that's going to put it all together for you. When the housing market is rising, those mortgage brokers they do great. The home insurance, you know, those insurers, you know, what is it? What's that? The mortgage insurance.
yeah.
Yeah, those companies that sell the mortgage insurance, they all do great. When home
Mm,
sales slow down,
yeah.
when they go and revert, all of that stuff goes in the toilet, man. And it doesn't matter how great the company is, doesn't matter about how great the manager is. The macro economy just says time's up. You made enough money. This run's been going on a decade. It's time to have a retrace. Prices are irrational, you know, and so we have what they call a reversion to the mean, and so that's healthy. You know,
Mm,
it's like in the stores where you can buy. They'll sell the summer, like you can buy summer clothes right now in the stores at a discount price.
mm.
You know, so you buy last year's fashion and wear them next year.
So
Or you go early and you get winter clothes now. You buy or you go buy snow shovels and your snow blower. You buy that now. It's
mm,
much cheaper.
mm.
You know, so you get hip to buying things, getting ahead of the season. The same thing is true in stocks. You kind of study the cycle, but you won't if you unless you're looking at things in, you know, 20, 30, 40, 50 year time span, you don't see the, but then we call that sector rotation. Money rotates from one part of the economy to another,
Mm.
and I don't even want to say as a trader. I'm just going to say as anyone in America that's trying to grow their retirement account or manage their money, that's what you really should be trying to learn is sector rotation, to learn how look in the past and see how money has moved from one sector to the next. And once you add that understanding of the dollar and relationship to those commodities, that's the secret sauce. That's the key. That's the canary in the coal mine to let you know that okay, this money is about to rotate.
So
And this
go ahead, bro. Go ahead. I'm sorry.
no, I was going to say this run that we've been on with the Nasdaq and DAC and all that. It's fat and happy, man. We're not going to get out of 2018 before I don't think we're going to make it to Thanksgiving before that nasty crash is going to start. But
Mm.
if I'm wrong, okay, outside January or February, but it's not long. We're not talking 6 months.
Yeah.
No.
Now,
So it should be
do you
well.
think the Fed rate has anything to can give us like signs that this is approaching?
You mean the interest rate?
Yeah, the Fed rate. Yeah.
Well, you're getting the signs now that as the dollar is in demand, because around the world, the interest rate is rising because the dollar is in demand. The Fed knows that everybody trusts the U.S. dollar right now more than they do their own currency. So since and they know that gold is weak and you know metals and energy, and so the Fed knows that that what they have, which is the dollar, is in great demand. In that environment, you can charge a premium, which is what interest is, a premium. Now, when your dollar is not in demand, you can't raise the interest rate. You have to offer an incentive for people to use it. And that's when you cut rates. So it all works together and it all makes sense.
Mm. I look that up, man.
I mean, if you had a lot of something and you knew that everybody wanted it, what would you do? You'd raise the price.
Supply and demand.
It's like that girl that you used to could take to McDonald's or you know, TGI Fridays. You know, she went to the college campus and saw everybody checking for her. Now, no, that's not good enough no more. You got to take her someplace, you know, a little pricier. You know, so the Fed knows when
She got to get Harrows, in my opinion.
Yeah, man.
So the Fed knows when the dollar is in demand and they raise the interest rate. That's confirmation right there. And even with the interest rate going higher, the dollar still keeps going higher. So when you got it, you got it. When you're in demand, you're in demand. But when this run is over, the rate cutting cycle will resume. But right now, it's money time. That's why it's funny to me when I hear, you know, all these countries complaining about, you know, the dollar strength. I'm like, look, the dollar has been generally falling since 1970. These little periods where the dollar has some strength, they can't take it and they complaining.
Mm.
You know, it doesn't matter what happens if they pick another currency, nothing is going to be unchanged. Anything they pick is going to have volatility. So, you know, we have to live in a changing world, learn how to live in a world, you know, with variation and change and flux.
You know, dollar will. You bring up the dollar will has. I think that might be Jack.
Hold on, my bad.
You bring up the idea that the dollar has been sliding since the '70s, but if you think about that period of what's been happening since the '70s and the '80s, is that you've had emerging economies coming out of Asia with Honda and Toyota, Mitsubishi, most of the Japanese car manufacturers coming out challenging the Americans, and then you had a period in the '80s where the Japanese economy did collapse, but the dollar was still sliding against the euro, right? So you still had European car manufacturers and industries emerging and challenging American industries. So I think a lot of that is related.
Yeah, and we also had huge world population growth, and people are customers. People are consumers. So it's hard to have a growing economy without a growing population.
Well, the black community has been growing a lot steadily, and what does that mean in reference to the dollar?
I would say, and we participated in the economic fruit. You know, we have the largest middle class than we, I presume, them since ever in America. You know, so you know we definitely got you know we participated. You know, so that dollar weakness, which increase home values. We have a lot of black folks that own homes now, and you know, we complain about gentrification, but hey, that's a part of it. Other people are coming to your neighborhood and they're willing to pay top dollar for your house. And I say to people, isn't that why you bought your house, to sell it at top dollar? So just back to that same idea that nothing lasts forever. We live in a changing environment, and you know, fast forward 2 years from now, people are going to be complaining when their house starts to lose value, and they're going to go, "I should have sold."
Mm.
You know, so.
Any other points to be made before we close it up? Nope. All right. Well, don't forget to come back Monday. Monday is our space and technology show. Um, yeah, Monday is September the 10th. Space and technology, same time, same channel. And with that said, I'd like to thank everybody that joined us on the panel and in the chat room. So with that said, any other last goodbyes or last comments? All right. Thank y'all for tuning in, and we'll talk to y'all later. Peace.